On June 15, 2026, Microsoft CEO Satya Nadella shared a new philosophy for the company. He argued that the future of the firm relies on a learning loop, where human capital and token capital compound together. 3 weeks later, Microsoft put $2.5 billion behind that idea, launching a new, standalone AI business unit called Microsoft Frontier Company to build out this proprietary token capital. But in that exact same week, the company executed a radically different strategy for its human capital. Across Microsoft's sales, consulting, and Xbox divisions, thousands of employees were handed layoff notices. This purge targeted some of the most acclaimed talent in the gaming industry. Legendary studios like Arcane, Ninja Theory, and Double Fine, led by veteran creators like Tim Schafer, were suddenly locked in intense negotiations just to avoid complete closure. This wasn't a company running out of cash. Microsoft's gaming division generated $21 billion in revenue in the previous fiscal year, and they recently spent nearly $70 billion to acquire Activision Blizzard. Yet, a corporation flush with nearly $100 billion in deployable capital decided it could no longer afford to pay the teams responsible for some of the most critically acclaimed video games of the last decade. How does $21 billion in top-line revenue result in the systematic dismantling of Microsoft's best human artists? Revenue figures can be deceptive. A division can bring in billions at the register, but if the cost of production remains high, its survival is never guaranteed within a corporate structure focused on the bottom line. This diagram illustrates the core problem for Xbox. They brought in $21 billion in revenue, but after expenses, that massive total shrinks to roughly $500 million in actual operating profit. That leaves the gaming division with a 2.4% profit margin. Compare that to Microsoft's Azure Cloud division, which operates at a 32.6% margin. And the gap widens even further when we look at Azure AI. That sector dominates the balance sheet, delivering profit margins exceeding 41%. From a shareholder's perspective, this math dictates action. Next to the hyper-profitable cloud and artificial intelligence sectors, the Xbox division operates like financial deadweight. So the capital saved by closing studios and cutting payroll isn't sitting in a vault. It is being directly funneled into a $100 billion pipeline for AI infrastructure, buying massive server arrays of NVIDIA processors. Microsoft is executing a strict margin mandate. They are effectively liquidating their lower-margin human art studios to finance their higher-margin AI ambitions. This low margin is largely tied to the Game Pass subscription model, which has flatlined. Subscriber growth stalled out at roughly 34 million users in early 2024. This creates an impossible math problem for mid-sized, critically acclaimed games. A title like Hellblade 2 costs $50 million to develop, but because it doesn't bring in a massive wave of new monthly subscribers, it cannot pay for itself in the Game Pass ecosystem. Even high-profile projects aren't exempt from this scrutiny. Arcane's Marvel's Blade is reportedly over budget and has already slipped its release window from 2026 to 2027, delays that make it a primary target for cancellation under the new margin requirements. To fix these margins, Microsoft is abandoning the traditional console playbook. They are pivoting away from artistic, mid-sized Xbox exclusives and focusing entirely on massive franchises that can sell across all platforms, including PlayStation and Nintendo. There is one notable exception to this purge. Obsidian Entertainment was saved, but largely because their upcoming role-playing game, Avowed, is scheduled for early 2027. Canceling it now would severely damage Microsoft's immediate release calendar. Survival inside the modern Xbox ecosystem is no longer about critical acclaim or artistic merit. It strictly requires multi-platform revenue potential and an immediate return on investment. This reallocation of resources reveals exactly how Microsoft views its future. Token capital is prioritized because it is a proprietary, infinitely scalable, and entirely controllable machine asset. Human capital, by contrast, is increasingly treated as a messy, expensive, and unpredictable liability on the balance sheet. But shuttering studios like Arcane and Double Fine destroy something that cannot be easily quantified. It permanently erases decades of institutional knowledge and deeply rooted creative chemistry. Game development is an art form. No algorithmic learning loop or foundation model can replicate the intuition, taste, and human soul required to make a true masterpiece. Microsoft is making a massive bet. They are staking the entire future of the firm on the premise that algorithms will ultimately scale better than human creativity. Prioritizing token capital might satisfy a quarterly earnings report, but it leaves Microsoft without the creative institutions that built the Xbox brand. The result is a more profitable